And if you do not own gold and silver, you're not going to get any when this thing breaks, because it's going to move the little by little by little, then the bang all at once. It's going to be the biggest bang that you could ever imagine. When there is no silver to deliver on these naked short positions, when the ETFs break, when all of this break, and it seems like it's getting to the point of breaking, I think it's a once in a generation opportunity that I hope people are listening to.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 27th through June 3rd, 2024, while supplies last. First, we feature 2023 1-ounce Gold Britannia at just $59 over spot. We also have backdated silver 1-ounce Kangaroos at $3.10 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We are always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. It's usually every Tuesday for the weekly market update. We missed one last week, but he's back here today, gratefully. And it is May 28th, 2024. Andy, thanks for coming back on Liberty and Finance.
Good to be back. It's crazy that the year is already over half by. It's, I always say this to you when we do these, how fast time seems to be flying, but I don't know, man. It doesn't seem to be slowing down at all. That's for sure, does it?
We're grateful to live in a area where we get to know our neighbors. And as we walk our dogs around the neighborhood, they ask us about our one who's the most remarkable big guy. And we say he's 9 years old. And then we look at each other and we go, it can't have been more than 5 years since we got him. But I think that the whole COVID era that was like 3.5 years, it all collapsed into one nightmare. So I think that kind of throws all of our timings off as far as how fast things go.
Well, you think back, I've said this before about things that you heard from your father in the past that, right in one ear and out the other. But that statement he told me about life being like a roll of toilet paper, as you get older, it starts to spin much faster. Maybe it's true after all, because the passage of time is extraordinary to me lately. And I'm cognizant of it intermittently anyway. I'll say, like today, geez, it's already, we're already halfway through the year plus. It's crazy. Anyways, it's good to be here, and lots going on for sure, Dunning. And I do believe that this trend of acceleration in events and in chaos and in newsworthy things to talk about will only increase. We've said that since the beginning of the year. At the beginning of the year, we were told 200 BRICS meetings. Well, today, they're having a big BRICS meeting related to finance. I think the actual title of it is the BRICS Deputy Finance Ministers and Central Bank Governors. They're meeting today. I wonder what that's all about. Could it be discussing their commodity-backed currency? Who knows? But the big meeting in October, the election in November, there is no shortage of things to talk about and ponder. But today I want to mostly talk about silver. And, I don't know if you'll let me just go here. I watched an interview on Palisades Radio with a very, very fascinating man named David Jensen. I want to give him credit for a lot of what I'm about to talk about, but it got me digging into what he was talking about because it made so much sense. So I started digging myself, and I find what he had to talk about fascinating. And I think when you put all of this together, it starts to put together an interesting thought experiment, if nothing else. So, I think today, I'm glad you put on your silver tie. I think today we should talk about silver, if that's okay by you.
Absolutely. Yeah, go for it.
So this morning, now again, I've really been trying to put all this together over the last few days. So excuse me if it lacks a little bit of coherence, but I hope it does. Because there's a lot to take in, but I'm trying to put it all together so people can understand. Today, we've talked a lot about the arbitrage going on in the Shanghai Metals Exchange, Shanghai Gold Exchange. Today, 28th, silver closed at $36.01 on the Shanghai Gold Exchange. They can't hold this down anymore. They can't. And when you see open bids in Shanghai for $36 silver, I think it's just the beginning. But let me try and put all this together. So it appears as though we have the makings of what could be a giant silver squeeze. And I would also argue, it appears to me, Zoltan Pozsar was dead on. I think in 2020, he called the Bretton Woods 3.0, number one, when we took over from the pound sterling, number two with the petrodollar in 73, and now number three, the system that will be all about commodities and transparency. And it's as if the commodities are becoming more valuable than money. And let's call it currency, not money, more valuable than currency. There's an old saying, he who has the gold makes the rules, but you could go even further and say he who has the gold, the silver, the rare earth metals, the copper, all of the commodities, hard and soft, make the rules. And when you think about China accumulating the London Metals Exchange, when you think about China striking deals for natural resources all around the globe, when you think about, including food, wheat, corn, soybean, you name it, when you talk about the BRICS nations in general being commodity rich, this begins to make great sense. And it seems to me that the gold and silver markets are literally playing by a new set of rules that I've never seen before in my time, 34 years in this industry. The resiliency of the market is astounding to me. These are things that never have happened before. And I think especially silver. And when you look at the COMEX numbers and you can see that these bullion banks, the cartel bullion banks, have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. And they're going to be forced to cover the paper shorts. And I think that's something that, we've always just taken for granted. People will say, well, they can just keep doing this forever. You can, in an environment where the demand for those commodities is non-existent, but you can only manipulate a market over an extended period of time by pushing it in the direction that it is truly going. And the trust in the United States and the Western system has been extraordinary for a very long time, but it's as if the glass has been broken. And putting back that glass is akin to putting back the trust that has been shattered, at least across the entire Southern Hemisphere, if not most of the globe. So lately, there's been a lot of talk about the global inventories disappearing in silver. I mean, you look at COMEX, it's been bled dry for years. We've talked about that. You look at the LBMA, it's got the lowest level of inventory, second lowest level of inventory for sure in the 140-year history of the exchange. And now we're beginning to see things on Shanghai disappear. We've seen, and we'll talk about that, we've seen the ETFs be bled dry. Everyone says, well, there's great availability in the retail market. Well, that'll change, and it'll change really fast if what I'm seeing is actually happening. The American public has been asleep at the switch. They have been infatuated with NVIDIA and Bitcoin. They've even been infatuated with the 5% return in treasuries with no risk. I understand all of this, but they're missing what could be a generational move in metals and in particular in silver. Now, there was a lot of talk, and Mr. Jensen talked about all of a sudden you have bullion bankers showing up at the Shanghai Metals Exchange. Now, remember, the numbers on the LBMA, we're told there's 800 million ounces of silver there, of which 500 million belong to the ETFs. And when you realize that leaves 300 million ounces, that's about what is left on COMEX in the entire ecosystem. In COMEX, about same amount, but in COMEX, there's only about 40 million ounces backing the contracts. The rest of it is eligible and it's not for sale. So who knows what the real numbers are, but they are, 300 million-ish or less globally on the Western system, and probably a lot less backing everything. I'll keep that in mind. But I did some digging myself, and I went right on to the Shanghai Metals Exchange website. And you can see for 4 straight weeks, starting the second week in March, first we had Deutsche Bank, then we had HSBC Bank, then we had JP Morgan, and then Standard Chartered Bank show up one after another for 4 straight weeks. And Jamie Dimon evidently is there right now. And could there be a coincidence with these 4 bankers showing up? And since that first week in March, the Shanghai Metals Exchange have bled down in silver to a new low not seen since 2020. Who knows what deals were struck in the back room at the Shanghai Metal Exchange, but it becomes really interesting when you realize something that I didn't realize until watching Mr. Jensen's interview, and that is that gold cannot be exported out of China without first depositing a bar into the Shanghai Exchange. So then you can export it. So this is contrasting with silver, which can be exported. And it would seem to indicate to me that the banks are there not to talk about gold. It would make no sense. They would have to deposit their own gold first into the vaults in order to export it. It makes no sense. They're there to talk about silver. And it almost speaks to a desperation. Please help us. We're trapped. We have massive short positions that are naked, and I'm going to get into that, but we don't have the silver. Help us. We'll work out a deal. Maybe it's gold related. Who knows? But look, we know that silver imported almost between 5 and 600 million ounces of silver in the last 2.5 years. And again, to put that in reference, COMEX silver inventories are roughly only 40 million ounces of silver, and they're rehypothecated over 1,600%, right? So 16 people hold the same contract, and it's probably a whole hell of a lot more than that. And we do know that the LBMA inventories are down to their lowest level or second lowest level, debatable, in the 140-year history of the exchange. This becomes even more interesting when you realize this. They have these huge naked short positions, and the inventory levels on both exchanges are at record low levels. You have countries like India importing over between 5 and 600 million ounces. That would be way more than is available in any of these 2 hubs. You can start to see the significance. I think you'll see more in a minute. So it's important to understand that for decades, the price setting mechanism has been determined by the Western institutions like JP Morgan, like Standard Chartered, like HSBC, like Deutsche Bank. And that system seems to be really breaking down now. They're not controlling it anymore. It seems as though this is kind of the drive, maybe quietly in the back rooms of the BRICS nations. Let's beat them at their own game. This is stuff we've been saying on your show, and I've been saying for years on other shows, but largely that gold and silver are replacing traditional forms of savings, right? And the flow of gold from west to east is a real transfer of wealth, and it is really happening. And again, we've been talking about this for a long time, Dunnigan. What I find crazy is how the West is underestimating the significance of this. And at least the Western media doesn't speak of it all. Even the talking heads and people who I respect a lot in this industry are not acknowledging this is a game changer as far as I'm concerned. And it's difficult to know how much gold and silver is really being delivered, because these purchases, largely the London Metals Exchange is what's called the over-the-counter market, the OTC. And the members in the OTC market on the London Metals Exchange, they deal with one another on a bilateral basis, right? So they trade with one another, which means they take all the risks, including those of credit and between the 2 parties of a transaction. And so this is different to a exchange environment where you have clearinghouses and a backstop. Here, the big difference is that it's riskier, it's less transparent, and that the exchanges are subject to fewer regulations. So this is opposed as opposed to an exchange-traded environment like the COMEX. So what you have is a system that is opaque. and we can't really tell how much gold and silver are being transacted through the OTC markets. We talked about that last week with the huge amount of gold deliveries that are being delivered to Hong Kong and then trucked over to Shanghai, like massive amounts of gold kilo bars off of COMEX. They're bleeding dry our exchanges, and it's all being done on the OTC market with not great transparency, and it's becoming difficult to tell exactly how much, but we do see the flow. If you look, you don't have to look very hard. You can see the flow from west to east. Okay. So even the Financial Times recently just pointed out that the global flows of metal, the real level of buying from west to east is, especially China and Russia, has been way, way understated from what is reported. This was just in an article that came out in the Financial Times. You just had a guy, an analyst from Bank of Montreal, say that China is massively understating what they're accumulating. But this is a trend that's been going on for a while. Why tell your enemy what it is that you're accumulating? This is misdirection. They're not going to tell us. But the analysts, the Financial Times and Bank of Montreal have at least had the courage to say those numbers that we are seeing are not right. They're massively understated. Okay. So what the LBMA and the COMEX have in common is that they trade spot gold and silver contracts. Let's call them promissory notices. Let's call them promises to deliver. But the point is that when these exchanges were set up, no one really ever stood for delivery, right? And these countries that are doing so right now did not have the wherewithal or the sophistication to do so. On COMEX, it's typically 100-ounce gold bars. They do have the mini contract, the kilo bars, which we have seen been flowing to China. In London, it's the 400-ounce gold good delivery bar. They both trade the 1,000-ounce bars. There was an article by Forbes magazine recently that said there is now vastly more paper gold and silver, or physical, or at least gold anyway. They called it between 200 and 300 trillion in paper gold compared to 11 trillion in physical. So when you talk about this rehypothecation, when you talk about the ability to control the paper price by issuing more and more and more contracts, this is how they've played the game forever. They have rehypothecated the heck out of the markets, controlling the price, which is really the kryptonite to the Western system. These spot contracts, as they're called, represent well over 90% of the trading in the London Metals Exchange. In other words, the bullion banks are making promissory notices. Well, if you want it, fine, but no one ever stands for delivery. They keep issuing it. They overwhelm the price. But if they were ever called on the carpet, what would happen? We just mentioned that the silver in the COMEX market is 1,600+% rehypothecated. What would happen if everyone stood for delivery? Now, I want to put some of these trading volumes in perspective. The LBMA, the London Bullion Metals Association, publishes a monthly report on trading volume. So we said that the silver in the LBMA is roughly 800 million ounces, of which 500 million belongs to the ETFs. That leaves 300 million ounces left. Yet they trade roughly 292 million ounces of silver per day. 292 million ounces of silver per day. And 20 million ounces of gold are traded per day on the LBMA. But in a survey that was done between the bullion banks and the LBMA in 2011, they admitted that actually those numbers are about 10 times understated. And the way that they explained it was that if a bullion bank were to sell 20 contracts and buy 10 contracts, the net result would only be 10 contracts, and they would only count 10 contracts instead of 30. So what they're basically saying is it's about 10 times understated. And that would mean, just using math, that it's actually, instead of 20 million ounces of gold, it's 200 million ounces of gold. And compare this to the Shanghai Metals Exchange, where you have to deposit a bar first in order to trade it. Their daily volume is only 300,000 ounces, yet the London Metals Exchange is doing 200 million ounces per day. That would also mean that the London Metals Exchange is doing over 2.9 billion, with a B, ounces of silver per day, right? In other words, they're trading over 3.5 times the amount of yearly production every single day in silver. This is how they have, in concert with the COMEX, held the price down. The West has ruled the metals market forever by using this rehypothecation, this leverage. by permitting more paper claims to be created on the same amount of gold and silver allows the management of the price. It's not going to rise if you can way overwhelm the supply and drive it down, because in concert, the Western central banks had all the money, right? So I want people to think about this for a moment. Why is it that the commercial banks are showing up at Shanghai, and at the same time they're showing up, the Shanghai silver stocks are bleeding down to their lowest level in 4 years? So I guess I would say in conclusion, you cannot export gold out of China without first depositing the bar in Shanghai. We talked about that. We understand that, but you can export silver. And all of a sudden, these big bullion banks are showing up naked short, mind you, massively naked short to the Shanghai exchange for 4 straight months or 4 straight weeks, begging them, it looks like, for help. Think of the arbitrage that's going on right now. Silver at 36.01 this morning in Shanghai. Silver goes way up over a holiday weekend when the public has no access to the market. It's knocked down into Western trading, shoots right back up here. They're trying to hit it again right now. It's like we are entering a period of time where maybe these commercial banks are beginning to eat one another, that it's every man and woman for themselves, right? So I want to put that a little more color on this for 1 second, because there was just an article by Jeffrey Curry that came out. And most of you will remember Jeffrey Curry. He's the longtime global head of commodities at Goldman Sachs. And people will tell you he's as tied in as they get into the top of the commodity world. He's now, he left Goldman. He's at the Carlyle Group. And he's been saying something that I've been saying on your show for a long time as well. And that is that for the first time ever, he's saying this is why it's different. The first time ever, the dollar recycling is not occurring. It's being replaced with, let's call it, gold and silver recycling. And if you remember, he's the guy who said he slipped up big time. He's the guy that said the potential for the silver market to be squeezed is impossible because the shorts are the ETFs. He said the ETFs buy the physical and they turn around and sell it on COMEX to be able to hedge the physical position like any other corporate, or a commodity rather, excuse me. But that's not how it works. You wouldn't hedge metal on an ETF. You hedge something if you're like me, a company that has an inventory where I own the inventory, but they're safeguarding someone else's metal. You're not hedging it for them. They're taking on the risk. They think it's going to go higher. Why would you hedge it? So what he was basically saying is that they sell the metal into the market, creating more volume, more supply to help suppress the price. It's illegal in essence. He's admitting that they short the silver that they receive into the market. I've always said that the ETFs are a tool for the manipulation of the market. He admitted it. Well, it was a faux pas, right? So anyways, this is done to help suppress the price. But now he said a key difference between the current commodities rally and those of the past has to do with the changing nature of the petrodollar. Where have we heard that before, Dunnigan? With major commodity producers no longer automatically recycling their dollar-denominated oil revenues back into U.S. treasuries. Where have we heard that before, Dunnigan? It explains a lot why gold prices are as strong as they are, he says, and what is the evidence of that is the emerging markets, the BRIC countries. Wonder where we've heard that before. All met with Saudi Arabia and other key participants in November of last year and discussed how they're going to trade with one another using local currencies, and then whatever it nets out in settling, they would settle in gold. Where have we heard this before, Dunnigan? He notes that both China and India are paying for oil in local currency, and he thinks that the Russian sanctions on FX reserves mean we are unlikely to see U.S. dollar commodity deficit recycling playing out ever again. Where have we heard any of this, Dunnigan? I ask you. How long have we been saying this? And now Jeffrey Curry, that the head of the table, is saying it. He says, confirmation, and this is the interesting piece, the last piece of the puzzle. He says, Curry's confirmation of gold recycling of commodity surpluses, and I would add silver into that, and I would add oil into that, not just gold, means, here's the key, the de facto net settlement is gold. Let's not forget that oil markets, by the way, Dunnigan, are 12 to 15 times the size of global gold markets. So if indeed all of these countries are buying oil using local currencies and settling out the differences instead of treasuries into gold, what does that really say for gold's potential? What does it really say for silver's potential in this massive shortage that we see of available silver? And why are the 4 big bullion banks that are probably the 4 that are shorting it the most on COMEX, Why are they going to the Shanghai Metals Exchange 1 week after another? In essence, it seems they're begging for help in getting out of these short positions. And since they've gone there, the Shanghai silver stockpiles are falling like a stone. Could it be they're working out a deal? We'll give you gold. We'll give you whatever you want. We need your silver or we're going to blow up. And I think that should not be understated. And they're not making it easy on them, mind you, with $36 an ounce silver closed today in Shanghai. What are we at right now in silver? Right now in silver here in the West, we are at 31.78. They're approaching $4.25 an ounce higher. When we started talking about the spread in Shanghai, it was $2, then $3, now $4, $4.25. How much higher does silver have to go before people understand that this is maybe the opportunity of a generation? And I guess I would just simply say that I hope this is starting to make sense. This is a trend that the West perhaps can no longer be in control of. There is not enough physical supply to play this game. You can only manipulate a market over an extended period of time by pushing it in the direction that it is going. Now, I'll leave and take any comments you have, and thank you for letting me ramble. I love you. The last thing I'll simply say is this. The total money supply, M2, in the United States, is up 14 times since 1980, 14 times, yet silver is 60% of its high. Do you see a problem in any of this? This is all manipulation, and it's ending right here in front of us. You can see it ending. I hope what I've said has made some coherent sense. To me, what I'm seeing is a picture of desperation and last stages of this game. And it seems to me that the BRICS in particular realized the way to beat us literally is through the silver market and by extension, the gold market. And I think that's what they're doing. And I think this is going to end very badly for the West. And if you do not own gold and silver, you're not going to get any when this thing breaks, because it's going to move the little by little by little, then the bang all at once. It's going to be the biggest bang that you could ever imagine. And you can see this by this coiled spring that is so massively rehypothecated and leveraged. And when it breaks, when there is no silver to deliver on these naked short positions, when the ETFs break, when all of this break, and it seems like it's getting to the point of breaking, I think it's a once in a generation opportunity that I hope people are listening to, because I've never seen an asset class like silver that offers the upside potential with the lack of downside risk ever. And I've never sold on your show ever. I've never talked about people buying silver for upside potential, but I think it's as good as any commodity, any asset, any investment on the planet. I'll shut up and listen to what you have to say, but I hope I've made some sense.
Yeah, absolutely. There's a couple of points I wanted to underscore, and maybe in doing so, it might uncork another bottle for you to vent on. One is that you mentioned these major bullion banks showing up from the West, showing up on the Shanghai exchange, boom, 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 four in succession over the past 4 weeks that we've never seen their presence there before. And what it seemed to mirror to me was Janet Yellen showing up in South America begging for them to have, to please buy the U.S. debt. And you've brought up that principle before, but I saw a tie in there I thought you might want to follow up on, that desperation.
Yeah, that's exactly what it is. I mean, that's what's happening. Our debt, if you look from a historical perspective, owning another country's debt as an asset is a pimple worth of time and the whole scale. Gold and silver and commodities is wealth, and I think, and have been for thousands of years. And I think because of the sanctioning and the aggression and the confiscation of treasuries and of dollars, the rest of the world has had it. Not only that, I think it's become very evident that we are a country that is addicted to spending and have a real problem with our fiscal policy. And we are creating $1 trillion in debt every 100 days. Why would anyone want to hold our treasuries? We have chosen publicly, visually, inflation over austerity. Why would anyone want to hold our treasuries when they're being inflated away and when they're being sanctioned away? And so it just makes no sense. And I think one comment I said on your show and others for a long time, and it's even becoming more ingrained in my head when I think of it is that commodities are the glue that makes all these other countries stick together. All of these other, the pushback is who's going to trust China? Who trusts us anymore? It's the commodities that pulls the word trust out of it. Fine, we trade in local currencies, but any excess, we settle in gold. That's the deal. We settle in silver. We settle in oil. These commodities are changing the landscape. He who has the commodities makes the rules, period. They've been playing by our rules for a very long time. The United Kingdom put out a piece not too long ago saying, geez, we've really put ourselves at the mercy of other countries because we don't have the natural resources we need. And whether it's rare earth metals or oil or precious metals or grain, whatever the commodities are, you can see a common denominator. Look what we've done to ourselves with energy and all of the uranium and all of these things that we've mothballed or just neglected. These countries are jumping all over it. And when you talk about wanting to own treasuries, why would anyone want to own treasuries from a country it's broke, insolvent, and going around the world imposing sanctions? A country that's lost its bearing here at home. All of these things, they're all interconnected, and it's almost going back to it like we're trying to make this happen. I mean, either that or our politicians, our leaders are so stupid it's ridiculous, because you can see how these countries have quietly said, listen, we don't want to hold the treasury anymore. We don't want to be beholden to them. Let's all just start trading with ourselves, and we will settle in commodities and remove the trustless situation. We will inspire confidence and trust and begin to trust one another through delivering of commodities. And I think that's exactly what's happening. And so why are the Chinese bailing out the commercial banks? Because the commercial banks, I think, still offer something to the East that they want. And there'll come a time when they won't bail them out either. But there's some deals that are being struck that we don't know of in this opaque landscape. But I can assure you that this is not an act of benevolence. There is a quid pro quo going on in the back rooms that we don't know about.
Gosh, there's a lot to talk about here. I was going to touch on when you talk about this arbitrage opportunity. That's the simplest thing to see between the East and the West. You can also look at it before a merger and acquisition. It's often the norm for the party that's doing the acquiring to offer a premium to try to entice the shareholders to give up their shares to make the deal go. To premium above what the market is paying. And sometimes it's huge, 20%, 20%. 25%, whatever. And suddenly the closed on Friday at, X dollars, and it opens up Monday at X plus 25% because there's a premium available due to this leading indicator of what's going to be happening. The new regime is being revealed, and everybody realizes, oh, okay, the whole playing board just shifted. And then, just in case you want to go with it, the other thing is you talked about trustless ability for disparate parties to get along because if they don't trust each other, at least they trust the real asset. They trust the commodity or they trust the metal. And we've seen that we're approaching less and less reason for justifiable trust. I mean, we've talked about the United States, the full faith and trust of the United States government, the confidence in the United States dollar, and all that sort of thing. When you look at all of the insanity that's been coming out of officialdom for the past decade at least, as far as turning reality upside down, calling things the opposite of what they are, and basically rigging the system so that we know that we're not hearing the truth from official sources anymore in many, many, many areas of our lives, then if we're entering an era of reduced trust, then is it going to be, in fact, the things that are real, the things that are true, that are going to be trusted? And unfortunately, fallen human nature being what it is, liars gonna lie. People need to be wary of scams and illegitimate products and illegitimate dealers and things like that if they're trying to acquire real assets. You and I have talked about that before, but people, please, please, please keep your eyes open and make sure that what you're going to be acquiring, if you're looking for real assets, if we're going to be trusting in the assets rather than in counterparties, you got to make sure who you're dealing with and make sure you're getting the real thing. And then the last thing was about exhaustion stage of empires. David Morgan has talked to us about that. If you haven't seen the video, folks, the 4 Horsemen of the Apocalypse documentary, just type 4 Horsemen of the Apocalypse documentary. Take a look at it. It was made over 10 years ago, but it will knock your socks off if you haven't seen it in terms of this stage that we're living in now, the exhaustion stage of the empire. The Romans had their golden circuses. You talked about lack of austerity on the West, just throwing funny money at whatever cause just to try to curry and pander and get political support just to preserve a little bit longer your tenuous grasp on control. And then the last thing was this exhaustion stage of empires. We've seen this playing out over the centuries. You mentioned England acknowledging, the UK acknowledging that they're at a disadvantage in this new era because they don't have the natural resources. Neither do a lot of the Western countries. So the 350-year flirtation with the colonialist expansion of all these European empires that didn't have sufficient natural resources. They went all over the world, Africa, South America, everywhere, North America, basically taking over all these countries, colonializing them and pillaging the natural resources. And then we saw right after World War II, this wave went around the world of liberation, these countries declaring their independence from these empires. And now is this finally the last gasp where all of these countries that realize they can stand on their own feet with their own resources, their own ability to produce real things, are going to rise up and say, no more.
Well, and how's that happening too? Look at the Belt Road Initiative. I mean, I don't care. There's always going to be people say, oh, China's indebting these countries. And maybe, but they're doing it in a cooperative manner. Do you see China? Look, China's not perfect. Okay. They're not. And, let's just take Taiwan out of the equation. I mean, because I don't think the people in the West truly understand the dynamics between China and Taiwan. But do you see China having military bases all around the world? Do you see China doing things all around the world with coercion and sanctions? No, they are in a cooperative manner emulating kind of what the Western countries did for 300 years, but they're doing it cooperatively. They're going around and expanding and allowing these countries to stand on their own 2 feet by building the infrastructure that allows them to do this. And so say what you want, everyone needs a hand somewhere, and there is no perfect way of doing it. But in my mind, the way that China has done it has inspired a much greater sense of loyalty and cooperation. Even the Shanghai Cooperation Organization and the Belt Road Initiative is not something to be ignored. I've talked about that with you for going on 4 years, and it's not. And this all fits together. And they're putting all of this together in a cooperative manner, and they are using commodities. Zoltan Pozsar was dead on right in 2020 that we are entering a new system that's all about commodities, and that's exactly what it is. And they are becoming worth more than currency. No one wants the dollar that is ultimately going to die. Yeah, they have to take it. They have to use it to get out of their debt positions, or because it's still the system, or whatever it is. They don't want to. They have to. That's going to change, and that's why they are replacing their treasuries, which would be the first step, in commodities, because there's your savings, and you can see very, very easily that especially gold has way outperformed the bond market with no counterparty risk for the better part of 26 years. If you just look at it or 25 years, just go back to the beginning of the century. So look, I believe this in my soul that this is happening, and I think you can, if you look closely, and you don't even have to be the smartest guy in the world. I'm not, to see the crumbs that are being laid here, and they're using, and I've been saying it forever, they've been using the suppression of the Western markets to accumulate, and that's exactly what they're doing. And now they've got a situation where that suppression could quickly blow up the whole system. These Western banks who are naked short, whether it be through naked shorting ETFs, as Jeffrey Curry told us, because that's not their silver to be shorting. So that's naked, or just to be creating massive amounts of naked short positions. Okay, fine, we'll stand for delivery. And when all of a sudden there's the inability to deliver, that's when the whole thing, just like that, goes upside down. When everyone runs, gimme, 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 and the whole thing blows up. And that's when the West loses its ability to control price completely, as the new exchanges in Shanghai and Dubai and Moscow and across the globe, the countries who produce it all, who accumulate it all, and have been accumulating it copiously for years, will set the real price. that's when things really change. What does it look like here then? Haven't given that enough thought. My mind kind of goes fuzzy when I get there. But I'm sure there will come a time where I have no choice but to give that a lot of thought. Right now, I'm just basically feeling that we're heading down that path with a great deal of inevitability.
Well, Andy, our viewers and I appreciate your visits here because of the sincerity and the depth of your research that you do, and as well as your connections in the retail bullion industry, and the people that you talk with gives you a wide and deep base to draw on to bring these insights to us, and we appreciate that to no end. And almost forgot. For those who are looking at weekly specials as a way to increase their physical assets of real things, what do you have for us this week?
So we have in gold, we have the 2023 British King Charles Britannia 1 ounce at $59 over spot. I mean, I can't even believe how cheap they are. We have the backdate silver Australian Kangaroos at $3.10 over spot. Those are cool coins. They're like the Canadian Maple Leaf. They're the purest silver coins in the world, 4 9s, 9999. But unlike just about everything else of the major mints, they come in mint boxes of only 250 coins instead of 500. A box about this big, and they're much more easily managed. They're great because all the other mint boxes are 500 ounces. The Eagles, the Maples, the Krugerrands, the Britannias, they're all 500 ounces. So like these a lot, especially since they're easily managed and stored. And then I think next to pre-65 silver, the best thing I've seen for trading, for bartering perhaps, or having utility in silver would be the backdate Canadian polar bears we have. It's only a limited supply because we've offered these now for over a week, but they're $2.50 over melt per coin. They come in boxes of 240 half-ounce 4.9 fine polar bears from the Canadian Mint. Say 1/2 ounce pure silver on them, 120 ounces per box. I love them, and I own a bunch myself. So seriously, if you're looking for something with greater utility, this would be my first choice, actually, right up there with the pre-65 silver.
Well, thank you for always finding values that you can offer to us. And remember, everyone, that everything you get from Miles Franklin is guaranteed authentic, and they stand behind it 100%. A+ and accredited by the Better Business Bureau. So happy to share any of that information, but do be careful of what dealers you deal with, because there's going to be more and more coming out of the woodwork as this becomes something that people are talking about. When there's buzz, you get a lot of cockroaches coming out of the woodwork. So please be careful. There are a lot of good, reputable dealers out there. Make sure you're working with one. And Andy, as always, on behalf of all of our viewers, just thanks for joining us here for this weekly market update on Liberty and Finance.
I hope what I said was coherent enough. It's been going through my mind literally since Friday, and like a circle, like a zzz, and I haven't even slept trying to put all this together. But it's happening, Dunnigan. It's real, and I want to thank you for allowing me the floor to just ramble. Most people wouldn't do that, but I love you. Thank you, and hopefully for all of you out there, this makes sense. If you have questions, you can always reach out and try my best to put a little clarity on it, should I have not drank enough of my morning coffee today. But in any case, I hope you have a great rest of your week, and everyone out there. And I will look forward, as always, to picking up where we left off, because we're getting close to, I think, some crazy times as the big BRICS meeting approaches. And, of course, the most important election in my lifetime shortly thereafter. So thanks again, Dunnigan, and I'll look forward to speaking with you and everyone else next week.
Take care, Andy.
See you, my man.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 27th through June 3rd, 2024, while supplies last. First, we feature 2023 1-ounce Gold Britannia at just $59 over spot. We also have backdated silver 1-ounce Kangaroos at $3.10 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.